Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Wednesday, May 8th, 5:18 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup daily market insight video. Market state, we're in an uptrend. See the trend gauge over here. Leaders, green flag, acting fine. Nice consolidation over the last 2 weeks. Couple of earnings report blow ups. We'll talk a little bit about that. But mixed earnings reports for the most part. And we'll discuss this briefly when we get into the tail of the tape. But analysts have been raising their Q2 earnings estimates as Q1 earnings progress. And that's out of the ordinary. Normally, analysts are too bullish and they end up bringing down the next quarter's earnings estimates. Why is this important? It gets to the valuation discussion when people try to put a multiple on the S&P 500. And if earnings outlooks are being raised, that's a benefit for the bulls. We also, besides leaders, every night track our the 5 major indexes across 3 time frames: the short-term 21-day moving average, medium-term 50-day moving average, long-term 200-day moving average. All 5 of the indexes are above those levels. We're waiting for the end of the week to move medium-term 50-day moving average to bullish. We want that to stay above into the close of the week. So what happened today? Really the second straight healthy digestion day. Yesterday, leaders pulled back as money rotated into value names. Today, growth leaders mixed. The index is mixed. All in all, a healthy digestion day. After 4 days up, the market certainly could use that. And what that does is market coils, digest for a move either up or down. We don't predict which, but lately the trend has been bullish, and consolidations resolve in the direction of the primary trend normally. Certainly that's what bulls are looking for. And we've got the participation by leading stocks, so that's where we're leaning as well. No predictions. We interpret things day by day here. But after a nice move up last weekend, Monday, 2 nice digestion days are a good thing for the market. You never want to go straight up or straight down. So here are the numbers: 21 over 21 leaders list. Average down 0.73%, but 2 of them down on earnings over 9%. If you exclude those, the rest actually higher by 0.15%. So we don't want to skew the picture because of those 2. They certainly blew up and they'll be coming off of the leaders list when we regenerated over the weekend. But 9 up, 9 down, 3 sideways. As I said, mixed. The big 8, this is the Magnificent 7 and plus Netflix, down 0.18%, consolidating nicely. Tesla, the weakest, down 1.74%. The RG8, this is our 8 growth ETF composite. Not a good day for it today, down 0.65%. The main culprit being ARK-K, down 2.5%. Tesla, big holding in ARK-K, down 1.74%. That's always going to be a headwind if Tesla is down in ARK-K. S&P 500 basically flat, down 0.03 points. That doesn't even register in the 100th decimal point. So we'll call it flat. Equal weight down, basically flat as well, down 0.02. NASDAQ 100 down 0.06. Equal weight down about 1/3%. Dow Jones Industrial Average, the leading index on the day, up 0.44. Mid caps down 0.3. Russell 2000 small caps down 0.46. Global Diversified 60/40 stock bond down 0.1%, which is about where our flagship portfolio GROTECTION was on the day as well. Our growth stock positions basically mixed on the day. Bit to the downside, First Solar down 2%, FCX down 3%. We'll talk about this when we get to the tail of the tape. Let's get into it. We'll start off with the S&P 500. And the best thing that the bulls got to see today was a gap down in the morning, and we put in the low within the first 5 minutes, trended higher back into yesterday's range, and then another very tight range, 4 hours from basically 11 o'clock into the close, just a 15-point tight range, tight base. As I said, markets can only do three things: trend up, trend down, or go sideways, preparing for the next trend up or trend down. And what we're seeing right now is that tightness after 3 days up. Next up, NASDAQ 100, kind of the same setup as the S&P 500, 3 closes above the 50-day moving average, 4 closes above the 21-day moving average. You can see the 8 and the 21 on track to head up through the 50-day as long as we continue to go sideways to up. We break down below those, then stop adding and see if our stops get triggered on the existing positions. Dow was the leader today. In fact, it's up 6 days in a row. Third close above the 50-day moving average. Mid-cap index down on the day, but closing at the top of the range. Again, a gap down, but didn't give up any further, no further progress to the downside. Really the same thing with the Russell. The Russell gapped down 1%, but the 50-day moving average held and it closed at the top of the range, still down 0.5%. The VIX continues to contract lower, with a 13 closing at 13 even. Market does its best work when the VIX is below 15. The dollar mildly higher today, back above the 21-day moving average, closed mid-range. Not a big move though, 0.1%. How did this translate over to the precious metals? Gold down 1/3%. Gold stocks basically flat. Silver up 0.12%, and Bitcoin down 1.53%, unable to get above that declining 21-day moving average. Over to bonds, price down, yields up today on bonds, mild headwind for stocks. The broad bond index down 0.25%, the long bond TLT down 0.6. Therefore, the 30-year yield rose by 0.5%, and the 10-year up by 0.65%. All right, that's our inter-asset correlation chart look. Let's go to the tail of the tape. As I mentioned, analysts raising Q2 estimates. This is a good thing for valuations on the S&P 500, and the bulls certainly want to see that. 4 days up with 1 day consolidation, 5th day above the short-term 8-day exponential moving average, 4th day above the short-term 21-day moving average. Positive expectations as long as we stay above the 21 day exponential moving average on the S&P and the NASDAQ. As far as sectors go, I want to remind you again to watch this. Every morning we track the 30-minute and the 60-minute range. When it opens tight, you're usually going to get range expansion one way or the other. In this case, we put in the low, as I said, within the first 5 minutes, and then broke above that 51.80 level. This will give you at least an outlook on the day of whether or not the bears or bulls are in charge. In this case, not much progress. We trended up to that 51.92 and then basically based for the rest of the day. But as long as you stay above that opening range low, then the bears are at bay. The individual sectors on the day: regional banks up, tech up, utilities up. A lot of utility stocks acting like growth stocks because of the big opportunity in power requirements needed for these AI data centers. To the downside, copper, uranium, home builders, typical with rates higher, basic materials and real estate, retail, and biotech. In the portfolio, ALAB, we had a 1% position in that. Gap down on earnings, couldn't recover. We got stopped on that. We added to GDX, that's precious metal stocks, VRT, and Spotify, slightly raising our beta from 1.24 to 1.29, our adjusted beta. This factors in ATR and beta of the individual names, weights them, and comes up with a single number to represent the exposure in the portfolio. Bottom line on today, indexes and leaders mixed. All in all, a healthy digestion day. All right, let's get into some charts. Let's talk about some earnings blowups. First of all, we're not involved in this, but Shopify, yikes, was building the right side of its base, but that broke down 18.6%. Always size appropriately going into earnings. You cannot afford blowups in your portfolio in individual names. Shopify down hard, another one down. Uber, former position of ours, we got stopped when it broke the 50-day moving average, down 5.7%. On the upside, and then you never really know how things are going to work out. Affirm, AFRM, initially gapped up 6%, ended up down 9.5% on heavy volume. Although Uber was down, Lyft was not. So that kind of interesting. Lyft up 7% on the day as it continues to build the right side of its base. All right, so we got stopped on ALAB. Let's show that first. Just gap down, couldn't recover. Heavy volume under the 21-day moving average. We just move on. And the other 21 over 21 entry from the leaders list that had a great setup, but underwhelming reaction to earnings was Coupang, Korean retail internet stock, down 9.3%, breaking below the 21-day moving average and breaking down from this nice progress that it had been making on this breakout from a keep and handle pattern. Notice that if you're taking profits at plus 20%, the way William O'Neill espouses in part of his portfolio management rules, it did hit pivot plus 20% before earnings. So if you took some off the table there, good for you. If not, my condolences. So those are the big earnings reactions to both the upside and the downside. Let's go through the portfolio right now. CrowdStrike, largest holding, hanging right at that 50-day moving average. Our second largest position now, Vertiv. We added to this twice today. This looks like it really wants to go higher. Some volume came in the afternoon. You can see here as it ran in the morning, formed a nice cup, and then broke out of that, chopped around, but above this pivot. So it's 97.50 level, closing above there. Let's take a look at a weekly chart. That's an all-time high for VRT. So that's data center cooling equipment is what VRT provides. And we've now got a 4% size in this. Third third biggest position, NVIDIA. Double inside day in NVIDIA. Just like with the indexes, it's coiling for a move one way or another. Earnings 14 days away still. What's next? Micron, consolidating nicely after its move up into the 120 area early this week. Kava, inside day today, basically closing unchanged. First Solar, a little bit of a pullback today, down 2%, but that's after a nice move up on Friday. Normal consolidation there. Pure Storage, nice little 3-day sideways action, consolidating above the 21-day moving average and the 50-day moving average. Got hit a little bit on FCX copper, but it bounced at the 21-day. Normal action here so far. VKTX in the weight loss drug category, hanging right around that 80 level. CEG reports earnings before the open tomorrow, and it looks like it wants to run before earnings, breaking above that flat base in the 200 level, up 3.7% on the day on above average volume. We'll see what we get out of this tomorrow. If this may be a target for an ad. On the other hand, it could do an A-lab and we'll get stopped out. And either way, that's okay. We know that the numbers work in our favor because our average win is twice what our average loss is, and we bat about 50%. So Net, that is a winning strategy. Here's Spotify. We added to this today as it cleared 300, pulled back a bit into the close, still slightly positive on the day. All right, that is the full portfolio review. What else do we want to take a look at? ANET back on our watch list after a nice reaction to earnings, up 6.5%, clearing the 50-day moving average, still in this what is now a stage one base because the low of the current base broke below the low of the prior base. That resets the base count. So we're at a stage one base there. APP on earnings up 11% after hours after being down 4% today. So that's going to be a new high for AppLovin. What else? Airbnb is down after hours, down 8%. That was forming a flat base. A lot of bases in progress here. Dell, another data center server name, up to the top of its range, up 3.2% on the day. That's going to wrap it. As always, like to hear from you. The email's don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, reach out to my partner, Dan Stewart. Dan@revereasset.com. Website's revereasset.com. I'm on Twitter @DVandenbord. YouTube, search for Revere Asset. Got another dislike or thumbs down on the video last night. Again, no comment from the coward to tell what he doesn't like, but that's part of it. Kind of funny, kind of sad for that person, actually, but whatever. And with that, I'm going to wrap it. Remember, our flagship portfolio is named GROTECTION, serves a dual mandate, and that is growing assets in uptrends, protecting them. During downtrends, we use a combination of moving averages and support and resistance levels and the action of leading stocks to determine our exposure to the market. And it's worked well over the years. And if you're interested, by all means, reach out to us. We'd like to discuss it with you. You don't need to sit like a deer in the headlights. If the market is going south, and just like that, you don't need to sit like a deer in the headlights as the market goes higher and you think you need to wait for a pullback. As Peter Lynch said, more money has been lost waiting for corrections to occur than during the corrections themselves. And with that, I'll wrap up the video for Wednesday, May 8th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.